What's up guys, and welcome back to my YouTube channel, and we're going to be going over venture capital secondary, and not the secondaries that you see in football. This is a unique financial trend that's going on because of what's going on in the early stage venture capital ecosystem. So guys, sit back, relax, cue the intro. So before we get into what secondaries are, first we have to establish what venture capital is and why this investment vehicle is actually becoming a major trend. So historically, venture capital, when you invest in startups and all these other things, it's generally what's called illiquid. You put that money in and you quite literally cannot touch it until there's a liquidity event, 5-10 years down the line through the various types of exit strategies, mergers, acquisitions, going public, all this other things, right? And things take time. But when I mention the secondaries market, this literally changes everything, and I'm going to explain right now what that entails. So guys, check this out. First, we have to go through what the primary market is, right? And this is what happens when companies raise capital. So when you raise capital, you actually issue some of your shares in exchange for capital and the expertise and all the other benefit that could fit you. Reference my other videos, by the way. I think I'm really cool when I break these other things down, but subscribe. And this is typically seen among pre-seed, seed, Series A, Series B, and Series C, all the way up to when you're going from growth equity to private equity. Now secondaries, this is where it gets a little bit sneaky, right? And if you've ever played fantasy football, hold this thought just real quick. Maybe I can help paint this for you. So when it comes to secondaries, these shares that are already traded among investors after the initial sale, right? So before I get to my very corny equivocation, now you've already issued these shares and they're kind of sitting in this pool, right? You're an investor, has shares of these early stage companies. You can now take the shares that you already have on the cap table. Once again, guys, if any of this is confusing, see my other videos. You can take these existing shares and trade them amongst other investors in what's called the secondaries market. Now, a way I would like to kind of label this, right, it's kind of like the Alibaba type of things that people really don't tell you about. Now guys, going back to my fantasy football example, you already have a pre-existing pool of players that you and your players trade with and do all these other things, and you essentially make a team. Same thing with the secondaries market. Forget players, insert stocks from companies that you've already invested in, and then you're literally playing ball with these type of entities, so on and so forth. So yeah, let's just go on to, so who can participate in the secondaries market, right? You've just learned about this kind of dark web type of industry. Now, who can actually get involved? Well, it's actually a diverse mix based on the Security Exchange Commission and all these other things. It's actually generous towards everybody. You have a mix of venture capitalists, private equity firms, institutional investors. Companies can even invest in their own secondaries. That's crazy, but I've seen actually very good success stories from that. And these players are essentially buying shares from early investors to exit their portion, and they're providing those early investors with liquidity. And guys, if you want to see this chart right here, right, this is interesting. The secondaries industry has actually increased a lot through the past 20 years, and I'll get into this later. But normally when the venture capital market goes down, the opportunity for secondaries actually goes up. So there's been significant growth over the past 2 decades, and yeah, there's really not much more to say there. So growth is driven by a few key factors of the secondaries industry, right? And we're gonna go through. So there's a growing acceptance of secondaries as a legitimate transaction alternate to what's already going on already. So guys, in case you don't know, in the COVID era, there was a lot of questions about the early stage, venture capital scene between overvalued companies, Silicon Valley Bank going down, and all these other things. So when that market bounced back, those valuations caught up, and some 3,000 companies globally actually had to fail because of this. So people want to avoid when these trends happening, lose their money. So now VC Secondaries has been a proven vehicle as a legit alternative in order to hedge risk. So with that being said, there's actually been a surge in VC secondaries by VC specialists, and with funds targeting strategies, they're actually targeting people as whole countries, raising from 1 to 1.25 billion. So I just thought that was really cool. Also, VC secondaries offer something that I actually mentioned in the beginning: liquidity. When you have an illiquid asset, you kind of don't want to sit there sometime and wait all the way until a public acquisition or a merger to get your money. So it provides liquidity. It offers strategic benefits for the buyers and the sellers, and it's an opportunity to get those returns a lot sooner with the right timing and all these other things in order to maximize your investments. So there is a chance to invest in companies at later stages as well without putting a crap ton of private equity money in there as well. So you can get your returns back from the early companies. You can invest in late stage companies at a little more generous terms and get in maybe a piece of pie at the seed as well. And we're gonna keep going with the benefits here, right? So like I said, liquidity. People can go in instead of waiting for a couple company to get acquired, they can actually sell their existing secondary shares and have access to that capital sooner. And this is actually a nice tool for early stage investors who might need to redeploy their capital into new opportunities while, not having to wait until they get these things. So yeah, guys, I just wanted to make this a relatively short video. And yeah, this is an overview of the VC secondaries market, and I hope I see you on the next one.